Good afternoon, everyone. Please, can you hear me very clearly? Yes. Can you hear me very clearly? Am I audible?
Yes, sir.
So I want to mute everybody. So after the class, so I will mute you. Please, can you see my screen? Can you see my screen?
Yes, sir. We can see it, sir.
Okay, thank you. So let's start. So this is ACD 302. That is cost accounting 2. So this is in line with ACD 301. Actually, in ACD 301, you have learned so many things. So you have learned about the categories of products. So you have learned about the method in product costing. So now in ACD 302, you'll be learning about the process costing itself. That is, what exactly is process costing and the characteristics of process costing. So you learn about the terminologies associated with process costing. Then the appropriate situation for the use of process costing and explain the procedures for process costing. And lastly, we are here to distinguish between process costing and job costing. So let me start with the first learning outcome, which is to define the process costing and discuss the characteristics of process costing. So now, if you look at the word process costing, you have it at the back of your mind that process costing is just a method of costing that is used mainly in manufacturing, where we have continuous, massive production through one or more processes. The method we are talking about is used to take the total cost of the process and average it over the unit of what production. So that is exactly what process costing is all about. So in another word, we can say that process costing is used when there is mass production of similar products, when you have similar products, and those products are in large quantities, where their cost associated with individual unit of output cannot be differentiated from each other. So now, when you now look at your manual, you discover that the process costing we are talking about here can be divided into two. We have the process and we have the costing. Don't forget the knowledge you have acquired in cost accounting 1, that is cost accounting 1 is a 301. Because when you get to this particular course, we should refer back to your knowledge of ACD 301. So now when you want to define process can be referred to as subunit of an organization, specifically defined for cost collection purpose. Why the process costing, why costing itself, let me just say costing itself has to do with when you have several departments and each department has its own operations. For a particular items, for instance, you have to know the exact cost of that particular items. Let me give you an instance. When you have a bottle, when you are selling a bottle of water, you know, in a bottle of water, we have the cover, we have the bottle itself, we have the sticker, and we have the contents. Do you understand? The costing aspect has to do with each and every component. What are the costs associated with each and every component of what? Of that particular bottle. So after you might have done the separate components, so that is what costing is talking about. But after you might have done that, you now pass the information to the what? To the cost accountant, in which the cost accountant will meet with the financial accountant to harmonize the total, because in financial accounting, we are dealing with the total cost, not the individual cost. So process costing in another hand is an accounting methodology that traces and accumulates direct costs. and allocate indirect cost of the manufacturing process. I said something the other time. I said in process costing, you will have similar products, and these products will be in what? In large quantity. Costs are assigned to products usually in a large batch. That is exactly what this one is talking about. Do you understand? So in the definition of CIMA, that is Chartered Institute of Management and Accountants, define process costing as the costing method applicable where goods or services result from a sequence of continuous or repetitive operations or processes. Costs are averaged over the units produced during the period. That's exactly my first explanation. So the cost has to be what? Has to be average. That is the total cost of the process. You average it over the unit of what? Production. So under the process costing concept, costs are accumulated over a fixed period of time, summarized, and then allocated to all the units produced during that period of time on a consistent basis. So when products are, instead of being manufactured on an individual basis, job costing is used to accumulate costs and assign costs to what? To products. When a production process contains some mass manufacturing and some customized elements, then a hybrid costing system is what is used. You can see the work of what? Process costing. You can see the work of what? The job costing. And we can see the job of what? The hybrid costing system. What do I mean again? What I mean is that when you want to use job costing, you must ensure that the product are being manufactured on an individual basis. So you use job costing to accumulate the costs and assign the cost to products. But when you are talking about hybrid costing system, when a production process contains some mass manufacturing and some customized elements, then you use what is referred to as what? Hybrid costing. Let us look at some of the examples of industry where this type of production occurs. We have oil refining. Oil refining industry is one of the examples of what the industry that makes of this costing system we are talking about. We have the food production. We have chemical processing. For example, how will you determine the precise cost required to create 1 gallon of what? Aviation fuel, when thousands of gallons of the same fuel are gushing out of what? A refinery every hour. So the cost accounting methodology used for this scenario is the first and fourth process costing. So the process costing we are talking about is the only reasonable approach to determine product cost in many industries. So how can you now say that? How can you apply the process costing? So it uses most of the same journal entry found in job costing environment. So the same way we journalize in job costing environment, that's the same way we journalize in what? In process. But when you get to one of the examples given you in this particular manner, you should ascertain my statement. So there's no need to restructure the chart of accounts to any significant degree. Just journalize your entries the same way you journalize in job cost and job costing environment. That's the same way you journalize in what? In process costing environment. So, and it will be very easy for you to even switch over to job costing from a process costing, one if the need arises, or to adopt what is referred to as hybrid costing system approach. That is, you portion both systems, that is both the process costing and job costing, you portion them together. So that is what is referred to as what? Hybrid. So we have so many types of what? Process costing. But when we get to that aspect, we discuss it. So that is that about the examples of industry that adopt process costing. We have typical industry for which the method is usually suitably adopted and concerned with the manufacture of the following products. We have chemicals, we have textiles, we have food and drinks, we have paint and furnishes, we have can and things, together with the examples I gave you above. Then what are the characteristics of process costing? we have the following features of process costing. Number one, output of one process becomes the input to the next until the finished product is made in the final process. Once you process a particular item now, the output of that item will be the input of the next item. So that's what that one is talking about. Then we have the continuous nature of production in many processes. It means that there will usually be closing work in progress, which was valued. That is, valuation of work in progress has to be what has happened. Then the third one, there's often a loss in process due to spoilage, wastage, and evaporation. During the process of costing, we always experience spoilage, we always experience wastage, we always experience evaporation. All this is what we cannot do without. Then we have output from production, maybe a single product. At the end of the day, look at the oil refining process. At the end of the day, the output is just a single product, but there may also be by product or joint product before you can get even the single output you are talking about. What are the importance of process costing? That's the next line of question that we need to ask ourselves. So the following are the reasons why company needs to allocate total product cost to unit of product. We have been, I've said something, the reasons why we need process costing in my first explanation. So the first reason is a company may manufacture thousands or millions of units. When I made mention of oil refining, so I've made mention of this example. So in a given period of time, another reason is that products are manufactured in large quantities, but product may be sold in small quantities, sometimes one at a time. We have the automobiles, we have loaves of bread, a dozen or two at a time, e.g. we have eggs, we have cookies. So this is one of the reasons again. Then we have the product cost must be transferred from finished products or finished goods to cost of goods sold as sales are made. So from finished good to cost of goods sold. So this requires a correct and accurate accounting of product cost per unit to have a proper matching of product cost against latest sales revenue. So what we are interested here is we want to know the exact cost of a particular product. But it's always difficult for us to get the exact cost of a particular item. So that is why we normally use process cost, and we now average the total cost to get the cost per unit. Managers need to maintain cost control over the manufacturing process. To control costs is one of the reasons why we engage in process costing. So a fraction of a cent cost change can represent a large naira in overall profitability. When selling millions of units of products a month, managers must carefully watch per unit cost on a daily basis through the production process, while at the same time dealing with materials and output in huge quantity. So the managers they have reasons for going into process costing, because they must know the price of a particular product. Or if you are manufacturing in a large quantity, it might be difficult for you to get a price of a particular product. That's why we engage in what is the first sort process costing. So material pathway through a process such as chemical might need to be given a value. Process costing allows for this. Materials pathway, that is, there are some materials that they are not going to going through all the stages of production. Their own is maybe you have 10 stages before you get to a finished product. Their own is to just complete the first 3 stages. Once they have done the first 3 stages, their own has finished. So, but you might need to be giving them a particular value. So that is why we need process costing. So that is about the importance of what process costing. So we have the terminologies associated with process costing. We have normal loss, we have abnormal loss, we have abnormal gain, we have waste, we have defective units, we have spoilage units, we have work in progress, scrap value, we have equivalent units. Let's talk about these terminologies one by one. When you are talking about normal loss is a default loss. What do I mean by default loss? It's an expected wastage under usual operating conditions. This may be due to reasons such as evaporation. Look at the building, Nigerian building, for instance. They have normal loss due to evaporation of drinks and some other content they are using. So during testing, do you understand? You might undergo this kind of loss. Abnormal loss, on the other hand, occurs over and above the normal expected loss. Any loss that is an expected loss too, but any loss that is above the expected default loss is referred to as abnormal loss. Do you understand? So when we are talking about abnormal loss, you might think of, oh, this particular loss will affect the organization negatively. So because let's assume you are dealing with machines. Do you understand? And you discover that the machine you are using in production process has faults. Do you understand? That particular faulty machine might take, let's say, certain reasonable percentage of profit for that particular organization. So some laborers may engage in errors by laborers. The laborers might make some errors which might affect the production process negatively. So these are abnormal loss. Then when you have abnormal loss, we also have abnormal gain. Abnormal gain is when the actual loss is lower than the normal loss. So that is abnormal gain. This could, for example, due to greater efficiency from newly purchased materials. The materials that you are expected to produce 10 bottles of something for a day, and you discover that this particular machine produces 50 bottles in a day. So this is an abnormal gain because you are not expect that particular gain. Then we have the waste. Those are the aspects of raw material with low measurable recoverable value. That's a waste. So we have defective units. Those are the units of product that do not meet the quality standard and therefore reworked. That is defective. Then we have the spoilage unit. Those are the units of product that do not meet the quality standard and therefore sold off. Look at the difference between defective units and spoilage units. In the defective units, you rework it. It doesn't meet the required standard, but you now rework it. Then under the spoilage unit, instead of you to rework, you sell it off. Then we have the work in progress. This is the term used to describe the unit that are not yet complete at the end of the period. So work in progress. That is, maybe you want to produce a bottle water and you have gotten the cover, you have gotten the label, you have gotten the content, but you have not gotten the bottle. So work in progress. Once you have gotten the bottle and you couple everything together, once the content is inside the bottle, so that's a finished product. Then we have the scrap value. Sometimes the outcome of a loss can be sold for a small value. You know, that you see all these aluminum companies. You know, when they engage in aluminum work, let's assume they are given a building or a partition that they should do. Do you understand? You know, when they are cutting their aluminum and they fix all the windows, everything they are needed to fix. Do you understand? At the end of the day, all the scrap that you see on ground, they usually package it and sell it for those who make all these marbles and some other things like that. You understand? They are using the scrap for another thing. So that is why the scrap can be sold out for a particular value. So that's a scrap value. After it is a waste, but you can still recover a reasonable amount of money from those waste. So we have equivalent unit. This refers to a conversion of part completed unit into an equivalent number of only completed units, such that if 1,000 cars are 40% complete, then the equivalent number of completed cars will be 40% of the total amount, which is 1,000. That is 400 cars. So 400 cars is the equivalent number of completed cars. If 1,000 cars are 60% complete, so 60% of 1,000 is what? Is for the equivalent number of completed cars. but 40% complete on the testing, the equivalent unit will need to be established for each type of cost. So that is that about. Then we have the learning outcomes theory. That is the situation where the use of process costing is appropriate and process costing procedure. Situation where the use of process costing is appropriate. Process costing is appropriate for companies that produce continuous mass units through series of operational process. That's exactly what I explained the other time. I said, when you are talking about process costing, the first thing that comes to your mind is that we have mass production. And another thing is, this mass production we are talking about is for a similar product, where the cost associated with the individual unit of output cannot be what? Cannot be differentiated from each other. So that is why most times the method normally accumulates total of the process, and you average it over the unit of the production. Do you understand? So that is a particular area where total costing is what is appropriate. So another important area where process costing is suitable is to adopt when one order does not affect the production process and the standardization of the process and product exists. However, if there are significant differences among the cost of various products, a process costing will not provide adequate product cost information. Look at that statement. If there are significant differences among the cost of, that is why we said process costing is always suitable when you have a similar product that undergo undergo a very huge processes. That is why we have a large amount of products with similar products under a large processing. So process costing is generally used in industry such as oil refining or petroleum, coal mining, chemicals, textile, paper, plastic, glass, and food. So what are the procedures? Process cost is sometimes referred to as continuous or average costing. We say total cost, then we average it over the unit of products. Thus, process costing is a method of costing production by processes in which the following take place. One, the product of the process becomes the material of a subsequent process. That is what we also have concluded with a particular product. That product serves as an input for another process. So the different product and byproduct, if any, are produced simultaneously at the same process. The product differing only in shape or form or complexion are not separately distinguishable from one another during one or more processes of manufacture. The cost of each process and the cost per unit at each stage are usually shown by the accounts. So accounting for process costing. There are 4 basic steps in accounting for process costing. We have summarized the flow of physical unit of outputs. You have to compute output in terms of equivalent units. You have to summarize total cost to account for and compute equivalent unit cost. And we have to assign cost to unit completed and to unit in any work in process inventory. So that is why I need to quickly recap you with what we did in AC301, although I was not the one that thought about in AC301. We have some types of process costing. The first one, if I could easily remember, we have weighted average cost. Weighted average cost. The version assumes that all costs, whether from a preceding period or from the current period, are lumped together and assigned to produce units. That is the 2 production units. So this is the simplest fashion to calculate the process costing. We assume that all costs, whether from preceding period or from the current period, are lumped together. That is, you sum them up together and you assign to production units. So that's the simplest form. Then we have the standard cost. The fashion is based on the standard cost. When they say standard cost is just a predetermined cost. Let me give you a live example. Let's assume you want to buy a phone before you get to the market, you discover that I don't have more than 100K to buy this phone. If you don't have more than 100,000 naira to buy the phone, you can say, okay, should I want to spend the entire 100,000? The answer is no. Okay, how much do you want to spend? Let's say I will not buy any phone more than 80K, 80,000 naira. So if you cannot buy phone more than 80,000 naira, invariably what you are trying to say is that when you get to the market, any phone that is more than 80,000 naira, you're not going to buy it, but you can buy lesser. Do you understand? Your predetermined cost is that, okay, for me to expense my money, it has to be what? 80,000 naira. So when you now get to the market, you now discover that, okay, I can even buy a phone that is even more less than 80,000 because I have seen the phone that I want. Now you now see a phone of 78,000 naira. You get to the market, you buy a phone of 80,000 naira, to buy a phone of 80,000 naira. But when you get to the market, you discover that you can buy a phone of the required quality that you want of 78,000. You have 2,000 difference. So the difference that you have is referred to as variance, because your standard cost is 80,000. That's your predetermined cost. While your actual cost is 78,000, that is the total amount of money that you eventually spend is 80,000. So the variance from the actual cost from the predetermined cost is just 2,000 naira. Do you understand? So that is your variance. But the variance we are talking about here is favorable variance because it favors you. But let's assume you get to the market, you cannot even see any phone of 80,000. The last phone that you see is 85,000, and you must buy a phone. But you have assumed that, okay, my predetermined cost, which is the standard cost, is 80K. But when you now get to the market, the least cost of the phone that you see in the market is 85,000. You have a shortage because, but you have the money, you have 100K. You can still afford to add that 5,000 naira to the 80K. So when you now buy a phone of 85,000 naira, so when you get home, your predetermined cost is 80,000, but the shortfall is 5,000. That is, you eventually bought phone of 85, which is the actual cost. The variance now is what? Is 5,000. Automatically, this is not a favorable variance. This is unfavorable variance. So in short, the standard cost we're talking about is just a predetermined cost. Do you understand? It's the cost that you predetermine. Do you understand? So its calculation is similar to weighted average costing, but standard costs are assigned to production unit rather than actual cost. So we have the actual cost in one side, and we have the predetermined cost in another side. So when you are dealing with the standard cost, your cost should be assigned to what? To production units, not to the actual cost. After total costs are accumulated based on the standard cost, these totals are compared to the actual accumulated cost. That's exactly my explanation about your predetermined cost and your actual cost. And any difference that you see between the standard cost and the actual cost is charged to a variance account, either favorable variance or unfavorable variance. Then we have first in, first out costing, that is FIFO. FIFO, that's another method of process costing. FIFO is a more complex calculation that creates layers of costs. One for any unit of production that was started in previous production period, but not completed. And another layer for any production that is started in the current period. Look at the difference. So I said it's a more complex layer, a more complex calculation that creates layers of completed. And one for any unit of production that was started in the previous production period, but not completed, and another layer for any production that is started in the current period. So that is first in, first out. Let me now give you the analogy. In the production process, the first products that you can meet is the product that you will pick. That's the first in, the first product that you entered, will be the first one that you pick. That is the first in, first out. Do you understand? The first product that you inserted or that you taken is going to be the first product that you pick. That's first in, first out. So those are the four important costing methods that we can see in process costing. So now, in the accounting for process costing, I said something about journalizing. And I said the way you journalize in job costing, that's the way you journalize in process costing. So, but there's one thing that is very, very important in process costing. The entry to transfer costs from one work in process account to another is you debit the work in process inventory, maybe second department, and you credit the work in process inventory first department. That's exactly what we have here. We have Fagbon laboratory company producer house paint in food processing department. We have the mixing department, which mixes the paint colors and the finished product, which puts the paint in containers and labels them. So we have two departments. We have the mixing department and we have finishing department. So the information related to company operations for October is as follows. We have raw materials who are issued for use in production. We have mixing department 551. And we have finishing department 629. So the same way we journalize, that's the same way we journalize it in job costing. That's the same way we journalize. So we have work in process, mixing department, you debit it. Work in process, finishing department, you debit it. The total of this is now credited to raw materials account. Do you understand? So the same way you do for the second one, direct labor, the work in process, mixing department 230. Work in progress, mixing department and finishing department 270. 230 plus 270 now credited it to wages and salary payable account. You can see direct labor cost incurred this. You understand? So manufacturing varied same way, and cost of mixed paint transfer from. So that's exactly what you are going to do as regards journalizing the entry in process costing. So difference between process costing and job costing. You know, something is similar to both job costing and process costing. And what is that? Is that I said something. I said when you are journalizing, so the same way you journalize in job costing, that's the same way you journalize in what? The process costing. But that doesn't mean that there are no differences between job and process costing and job costing. One type of product costing system that is used in certain industry is process costing. And that varies from other types of product costing method, such as just job costing in some ways. Costing is an important process that many companies engage in to keep track of where their money is being spent in the production and distribution processes. Understanding these costs is the first steps in being able to control them. That is one of the important functions of cost accountant is to control costs. And for you to control costs, you must be versatile in what? In both in process costing. Let me just put it like that. You have to be versatile. You have to understand the nitty-gritty of what? Of process costing. Understanding these costs is the first steps in being able to control the costs. It is very important that a company chooses the appropriate type of costing system for their product type and industry. Further distinction between process costing and job order costing can be summarized in the table below. So we have in process costing, we have homogeneous product. That is exactly like I said in the other explanations that in process costing, the product must be what? Is similar products. Why variety of different products is in job order costing? Costs are accumulated by process or departments. But in job costing, costs are accumulated by individual jobs. Summary of account are presented on cost of production reports. Summary of accounts are presented on cost of production reports in process costing, while summary of account are presented on a job cost sheet card. That is for job order costing. In process costing, the unit cost is equal to the process cost over output. While in job order costing, the unit cost is equal to total job cost over output. So these diagrams reveals the differences between the job costing environment and process costing environment. In job costing environment, costs are accumulated by jobs on job cost sheets, while in process costing environment, costs are accumulated by department on cost of production reports. That is why we have department A, department B, department C. While on job costing, we have job A, job B, and job C. So this job costing cost flows also explain both the differences between job costing account and process costing account. If you look at the job costing cost, we have direct materials, that manufacture overhead. So going to work in process inventory, that is job cost sheets are used to track work in process inventory by job. Then we have the finished good inventory, and we have cost of good sold. But in process costing, if you have direct material, direct labor, manufacturing overhead, it has to be splitted. Work in process inventory for each department, work in process inventory for department B, and work in process inventory for department C, before you now arrive at finished good inventory and transfer to cost of good sold. So that is that about the study unit 1 or study session 1. So if there's any questions, reactions, queries, I think there's room for that before we call it a day or draw the curtain for today's lecture. So any questions, let me try to, you can talk now. Hello, am I audible?
Yes, sir.
Okay. Do you have any questions or reactions or contributions? We are all learners. So Adebayo, Oluwafunmilayo, do you have questions or reactions? Or even contributions? It doesn't mean. So, in the absence of that, Olaide Tolu Opeyedet, you raised your hand. Unmute yourself. Unmute yourself.
Good afternoon, sir.
Good afternoon. How are you?
Hi, sir. Thank you for the class, sir. But there is this particular area you discussed about equivalence units.
Okay.
I didn't really understand that area. You said it refers to, yeah, equivalence unit under the terminologies associated with process costing.
Okay, I know.
Okay. So I want to just
when you hear the word equivalent, it is strictly synonymous to equal. Do you understand? So, and when I made mention of equivalent unit, I said this refers to a conversion of part completed units. Look at that statement. Part conversion, part completed unit. That is what we are saying is that when you have a process and you want to have a particular product, you know, that particular product will pass through stages before you can get it. That's exactly the same way I made mention of having a bottle of water. When you have an organization that produces bottle of water, do you understand? When you get to a stage whereby you have gotten the bottle, you have gotten the sticker, you have gotten the cover, but you have not gotten the what? You have not gotten the content of the water. Do you understand? So that shows that you have not completed, that is part completed units. You understand? So I now said the equivalent unit refers to a conversion of part completed unit into an equivalent number of only completed units. We want to assume as if, okay, we have gotten the head and the cover, we have gotten the bottle, we have gotten the sticker. So we want to know, okay, how many percentage complete do we have? Do you understand? That is why I made mention of an instance. I said, if 1,000 cars are 40% complete, you know, you have not completed. Then the equivalent number of completed cars will be 40% of 1,000. So 400 cars. That shows that the remaining 600 cars are not yet completed.
Okay.
Am I making any sense? So the equivalent number of completed cars is what? 400 cars.
400 cars.
Do you understand? So that is that about equivalent units.
Thank you. Thank you. God bless you, sir.
Amen. So take good care of yourself. So bye-bye.
Thank you, sir.
Thank you.